Hi, my name is Barrington Miller, Director of Issuer Engagement at the Canadian Securities Exchange, and I'm joined by my colleague from Montreal, Mr. Scott Pritchard. And why are we here? This is a special report, and we're going to talk about AI and machine learning, and in particular, what is going on in Montreal. But first, I'm going to have Scott introduce himself and say a few words. Scott, over to you.
Thanks, Barrington, and hi, everybody. My name is Scott Pritchard, and for the last almost 15 years, I've been working in Montreal as the Senior Advisor to the Canadian Securities Exchange. And just more recently, I've been talking to Richard Carleton, our CEO, James Black, Head of Listening Development, Barrington, and everybody at the CSE, about the vibrant community here in Montreal in the VC space and the many companies that have been financed through the various programs here in Quebec. And I've always been thinking about how do we as the CSE access more of these private companies and bring them into the public markets. And during that time, I was lucky to meet Machina AI, who are actually doing some of that work themselves and bringing a company public in the AI space here in Montreal. So there's really two components that we're going to be discussing: the VC community here in Montreal, and then more specifically in the AI space. And I just wanted to congratulate the company on this incentive of accessing great private companies and bringing them public, of course, on the CSE. So that's really the main focus of this podcast. Thank you, Barrington, for getting it organized. And I'll turn it back to you.
Thank you, Scott. You said it perfectly. But the people aren't here to see you. They're not here to see me. They're here to learn and talk to X Machina AI. So you're up, X Machine. Let's do this. Who are you, and who's in the room?
Who's in the room? So my name is Vaughn DiMarco. I'm head of deal flow and growth at X Machina. So my background is as an engineer and as an AI practitioner. So I started a machine learning consulting business back in 2012. Grew that to a small 15-person firm. And after a few years of building the business there, I joined a fund here in Quebec called Invest AI. We performed about 200 due diligences in the span of a 2-year period, and we allocated $30 million to around 50 companies based in Quebec who are doing artificial intelligence. So that's my background. We also have Daniel, my partner.
Thanks, Vaughn. So my name is Daniel Drouet. I'm also an engineer by training, but for the last 15 years or so, I've been an investor, an entrepreneur, a tech entrepreneur, and investing in the tech space. So after switching from being an engineering practitioner towards the investment side, I co-founded one of the first VC funds here in Montreal, specialized in early stage investment into the tech sector. So I ran that for a number of years before going off and building a few of my own software companies.
What does your company do specifically? What are you working on, and how do you do it?
Right. So we're trying to solve a problem in the market. There is a funding gap in the market. If you're doing a tech company, specifically software, when you're starting out, the only funding available to you is venture capital. Banks won't touch this, traditional investors won't touch this, because there's no tangible assets that can be seized and resold if you can't pay off your debt. So VC is the way to go for most tech startups. The problem is venture capital is only interested in companies which have unicorn potential. That is, the potential to go from 0 to $1 billion valuation in a span of 10 years. Now, there's only a tiny fraction of companies which have that potential. The vast majority of VC investments will be failures, okay? So in order to go from 0 to a billion in 10 years, you have to be essentially tripling every year, in the early years, and then doubling in the latter years. Very few companies can achieve that. But what happens if you're a company which is growing at 50% a year? You know, that is a great business. It's a fantastic business by public market standards, but it's not good enough for VCs. So there's nobody who's willing to fund these fast growing businesses at the early stage. So that's what X Machina is trying to do. X Machina, we're creating this public vehicle so the public markets can invest into X Machina, and we will then acquire and invest in these early stage AI companies, which are growing fast, which are break even or profitable already, but need additional capital to really capitalize on the opportunities.
So it sounds like you are operating like a fund.
So we are not a fund, we're legal, like if you want to look at the legal structure, we're a holding company. We acquire 100% of these companies, they become wholly owned subsidiaries of X Machina. But because we're a holding company, we kind of let them operate pretty much independently. We're not looking for broken companies that we can fix and then flip like private equity would normally do. We're looking to buy these companies where the team is strong, the business is good, we need additional capital to really to grow this thing. So we will provide that capital and we hold on to them for the long term. And what we're doing is we're adding up streams of revenue. All of the companies we're looking for should have a minimum of 20% growth, which means as we build out our portfolio of companies, X Machina as a whole should have a minimum of 20% growth. But then every time we do a new acquisition, that's a quantum jump in our revenues. So we're just growing by accretion of all of these revenues.
Maybe we could just take a step back here and start with artificial intelligence and talk about that sector and what is that and how do you choose your companies eventually, in that huge spectrum of companies.
So AI, the way that we're seeing it being defined and the way that we think about it is really when a computer is able to take on a task that previously would have been only possible with human intervention. So that, and that can be done in a variety of ways using a variety of different methods. But at the core of it, the key thing is there's data being used by software to make some sort of prediction and then to take an action, right? And so we are interested in companies that have a data set of some kind. They're using that data set, like they're making a prediction, and they're doing some level of automation in a workflow, preferably, focused on our interest is in industrial applications, B2B industrial applications, let's say construction, manufacturing, could even be agriculture and farming. Those kinds of industries are really interesting to us. And we are looking for businesses that are generating about $1 million or more in annual recurring revenues, and that are growing, like Daniel said, at 20% or more per year. And that's about it.
That's a great question. And the CSE was recently at Canada's Farm Show in Regina, Saskatchewan, a few weeks ago, and I can confirm that in the agricultural space, ag tech, the machine learning and AI is that's going to be another episode. And for our audience, check out Farm TV, farmtv.com. It's incredible. Like, it's absolutely outstanding, especially
there's applications for AI in essentially all industries. And where we find it most interesting is industries which haven't been really transformed in the last 20, 30 years by IT. And so we're seeing this now in agriculture, right? There hadn't been IT, the internet hadn't really changed how we do agriculture, but AI now is starting to have a big impact there. So we're looking at these huge existing markets where AI can have a meaningful, quantifiable gain on productivity.
What's the difference between artificial intelligence and machine learning?
Ultimately, I would say that machine learning has a much more sort of rigid definition in terms of methods, technical methods that are being used. It, can be simple clustering methods. Nearest neighbors, for example, is one example. Whereas I think AI is typically used in the context of software that's making predictions, software that's sort of like doing tasks and automating workflows that were previously not possible for software to do when you're sort of programming it by sort of like rigid instructions, right? So now you have these much more flexible programs that you can generate using data sources that were previously just far too complex, like images and text, right? So we're seeing these AI models being trained on basically the entire contents of the internet, whether it's the text and images, right?
So AI is a general term, and it's been around for decades. Machine learning is specific types of algorithms which have really come into their own in the last few years because we finally have big enough data sets and enough processing power to take advantage of these algorithms, which we couldn't before. So when everybody's all excited about AI these days, all the new stuff that's coming out, it's pretty much all based on machine learning, these new algorithms.
Well, I'm going to date myself, and I grew up watching Terminator, and that's when it comes to the rise of the machines and all of that. Skynet, exactly. And I know we're laughing about it, but I mean, there was that, and again, I don't know if this is internet lore or fodder, but there was that program where two machines started talking to each other and developing their own language, and it got shut down right away because that freaked me out. Is that where it's headed? Is that where it's going? I mean, I know it's kind of comical, but in the back of our heads.
So first off, there's all these great classic sci-fi movies from the 60s and all that about computers becoming smart and controlling humanity. To that, I always say, really, the only thing you need to do is pull the power. Unplug the computers and humans are back in control, all right? The thing to understand about AI today, okay, the practitioners talk about general artificial intelligence as something which would mimic a human brain, all right? We are not there. We're not even close to being there. And it's not even clear that the current things we're doing, the current approaches we're using will ever get there. All AI and machine learning it's statistics with linear algebra. It's just math. Now it's incredibly complicated, but it's not that complicated math, but you put a bunch of those equations together and it gets very complex, too complex for the human brain to handle, but it's just math. So you can train a machine to recognize breast cancer better than a radiologist. You can train a machine to recognize a dog in a picture better than a human can, right? But that machine that's really good at detecting dogs can't count to 10, doesn't know the difference between, a postman and a fireman or anything that's trivial for a human, that machine can't do. So machine learning allows you to train a computer program to be super good at one specific thing. What's great about humans is we can flip from one topic to another very easily, and we're good at a whole bunch of things. That's not true with machine learning or AI.
I'd like to change the subject just to get it back to Quebec, because I know you guys are attending this Startup Festival here, which Claude has mentioned to me. Claude Theriault is the CEO of Machina AI. And he said that this is a great place to meet the VCs who have some of these companies you're looking for, and also, of course, to see the startups. Maybe you could expand a bit on the festival and also sort of narrow it down to how are you choosing these companies? Like, where's the deal flow coming from, and where are you seeing the best opportunities?
From a deal flow perspective, I mean, we're casting the net pretty wide. So, for in the early days, we were really focused on, leveraging our networks. We have great networks. Daniel's been in the industry for the last 15 years. Claude, same goes for him. Myself, about a decade. So we have good, solid networks within the AI ecosystem in Montreal, in Quebec, in Canada as a whole. We've also started and are making extensive use of some of the online sources like LinkedIn, for example. I mean, every company in the world is on LinkedIn, right? So it makes sense to begin to, put our feelers out there and really start to crawl through that data and filter through, companies that are more than $1 million in revenue. So, roughly 10 to 20 people and up. So that's been a strategy that we're using. And I'm glad you mentioned Startupfest and the VCs, right? So, we're also building partnerships with the investment community, right? And, part of our strategy involves working with them and basically sort of like taking the baton from them once they've funded, provided seed funding to a startup, let's say $500,000 or more in funding, and then it becomes clear that company is not on track to meet their growth expectations to raise a subsequent Series A or B. Right, so that's a great fit for us to get involved because the company is still growing, at 50 to 100% per year. But given the current market, they won't be able to raise funding. So they're a great fit for us, and those partnerships are something that we are keen to expand on and invest in. So that's what we're doing at Startupfest. I'll hand it over to Daniel to talk about that.
Startupfest is actually just a fun event that goes on here in Montreal. It's a fun and it's important event. It is a festival. Think like going to Coachella, a big music festival for a few days and just partying, having fun, meeting great people, learning about and hearing new bands. Except in this one is focused on startups. So you have a bunch of talks, different subjects, but it's mostly about the networking that goes on. So you get startups from across the country coming in. You have the majority of the VCs and investors are coming in. You have VCs coming in from the West Coast and in New York and stateside in Europe as well for this event. And it happens in the old port of Montreal every year, where you get thousands of people coming down. And it's a bunch of startups looking to grow, develop networks, customers, get investors looking for the next deals. And everybody gravitates around that. Very, very informal. One of the few places where, a startup can start chatting to the person next to them in the lineup to get a beer. And it turns out that person's a woman who manages a $500 million fund in California, right? So lots of fun, great place to network and for us to reconnect with a lot of the VCs that we had very tight relationships with, but that it's only been virtual for the last 2 years. It's going to be fun to see our contacts in person again.
Once you sort out and you find your companies that you eventually invest in, talk a bit about the add-on value of your holding company and where you see synergies and where's that good, from the investor standpoint, why is what you're doing really good and going to provide synergies and of course more value and more profit in the end.
Yeah. So the first thing to understand is that, I think most of the listeners of this podcast are aware of it. There's a severe discount for private companies because they're not liquid. So we're able to acquire companies, for roughly 3 times their revenues, product companies. And as soon as this company becomes part of a public entity, those revenues are going to be worth roughly 4 to 6 times, right? So there's an arbitrage play here. We acquire that company. As soon as we acquire it, it's worth more than it was before. So that is a great bump for the investors. But the other thing we bring to the table is the fact that these are fairly early stage companies. They'll be anywhere from 5 to 30, 40 employees typically. At these early stages, these are good companies, but they still have a lot of things they haven't figured out or they didn't have enough resources to address. So First thing we do is we consolidate the back office, all of the financial and legal reporting. We have to do that because we're a public company. We have to make sure that it's up to snuff when it comes to the exchange's standards and what the regulator expects. So there's some consolidation which adds savings, cost savings there. We also bring in a lot of help. We have this network, which we call the value creation team, of top tier legal, marketing, product management, technical expertise that we can bring into the companies as required to help them get up to speed faster. And we can bring this talent in either full-time or part-time just to get them set up and then they move on. So we're able to accelerate all aspects of the business that way as well by bringing in this expertise that either the company didn't have access to. So for instance, top-tier technical talent is super hard to get access to these days, especially AI talent. We have a lot of that in reserve that we can bring in to help our companies move quicker. And so that's pretty much it. We bring there's three main things we're doing. A, there's just that arbitrage thing. So these companies are worth more as part of a public entity. B, there's cost reduction because we consolidate the back offices. And C, we're able to support them and give them access to top tier talent that they couldn't afford or didn't have access to before to help them move quicker and go from that early stage towards a more mature phase, more profitable phase faster.
Oh, that's a great answer. And Scott, those are fantastic questions. You mentioned Old Montreal and the old port, and I want to navigate in through those waters, as it were. And why Montreal? What is literally in the water of Montreal that is being as a hub for tech, for AI? A number of years ago, video games, it was a hub for Montreal. What is it? And why is it attracting so many people from outside? And how have you developed it, or how's Montreal developed it internally?
Yeah, so that's a great question. Basically, I think the root, you could trace it back to the University of Montreal and the Canadian government. And there's a very prominent researcher here in Montreal by the name of Yoshua Bengio. And he's kind of one of they call him the godfather of AI. And he was actually involved back in the Nortel days. He was doing research funded by the Canadian government on something called neural networks and deep learning. And really what they were doing was using artificial intelligence for computer vision, image recognition. And actually, I believe the first use case was for bank checks, being able to automatically recognize, what number was being written on the check so that they could automatically process checks. So it's come a long way since the, late 90s when that was initially started. We have, like Daniel mentioned, far more processing power. Like our compute resources have grown exponentially, and we have exponentially more data, right? So combine those two things together, and you've seen really this, massive growth in AI and in research. So Montreal has a very strong research community at the University of Montreal, at McGill, and from that, there's been also this excellent tech community that's flourished, right? So the tech community has grown very nicely. And a lot of machine learning companies and startups have happened, but in parallel to that, there's been quite an influx of capital, not just from the private ecosystem, but also from the public government ecosystem, right? So there are large funds like Scale AI that were started by the federal government as part of the Canadian Superclusters Initiative to fund AI within the supply chain ecosystem. And so, they have a $260 million fund, right, that they've been allocating into private companies to do AI projects and initiatives. And similar in scope was was the fund that I was taking charge of, which was Invest AI. So our fund was a little bit smaller. We only had $30 million, but each dollar basically was matched by private companies. So, that was more of a $60 million fund. So there's this large flow of non-dilutive funding Scale AI is one. The government of Canada actually in June just announced the phase 2 of their pan-Canadian artificial intelligence strategy, $475 million investment that they're making into the AI ecosystem. A big part of it is going to be invested here in Montreal and in Quebec. So there's a good amount of capital. To sum it up, there's a really solid technical network of experts in the field, from the research to the practitioners. And then finally, those two things have come together, and there's been a good base of companies that have been founded.
Yeah, if I can add on to what Vaughn was saying, it's a really good question, Barrington, because normally we expect innovation to come out of MIT or the West Coast of the States and all that. And why is there so much AI here, right? Why did it not first come out of Boston or somewhere else? So that what happened is the AI, there's been research going on for decades, but AI has gone through what's called AI winter. So people were trying stuff, and then in the early 90s, it wasn't working. That was the second AI winter, so people gave up on it. Government stopped funding this research because they said it's a dead end, it doesn't work, except in Canada. Canada continued funding this research. And so it wasn't that the algorithms weren't good, it's just we did not have enough computer processing power and large enough data sets to make it work. So when we finally got, about a dozen years, 10 years, 12 years ago, we finally got to a space where we have the computing power and the massive data sets available. The only people who were really good at this type of stuff were Canadian researchers. And so that's why there's a very strong AI community that came out of Toronto, where Geoffrey Hinton is. And there's three godfathers of AI, as Vaughn was saying. There's Geoffrey Hinton at U of T, and he now works also for Google. There's Jan LeCun in New York City, an old student of Jeff Hinton, who now works for Facebook. And there's Yoshua Benjo, who's the third godfather. He works at Université de Montréal, and he decided he did not want to work for a large corporation, but he wanted this to disseminate this technology as wide as possible. And so why is there so much AI happening in Montreal? Well, because Canada had a decade lead start over everybody else because we kept funding research in this field. And then finally, because the Quebec government has decided that AI, they wanted to double down and it's going to be one of the pillars to economic development. So the same way 20 years ago, the Quebec government decided we're going big into video games, and now Montreal is one of the top 3 places in the world for video game development. They've done the same thing for AI. So they've aligned public money with private initiatives to make sure that's going to happen. And we've seen it, like DeepMind's opened a lab here, Microsoft's opened a lab here, Facebook's opened a lab here, Google has another lab here. They're all opening labs here because Yoshua Benjo's lab in Mila is the world's largest AI research center.
And so just to add on, because we've talked about this previously, also the investment community is coming as well. You mentioned, I think, that Morgan Stanley's up here. I mean, I don't think they're here just for AI, but definitely.
So what people don't know is that the top 2 places for brain power, for academic brain power in North America, is Boston and Montreal. Montreal is actually a university city. So we produce tons of top tier technical talent. It's much cheaper than the talent you'll get in New York, Boston, or Silicon Valley. So now a lot of American firms have been moving up here to tap into the technical talent that we have here. We've got 4 large engineering schools here, and so on and so forth. And so people like Morgan Stanley started years ago coming here to tap into the technical talent. But we've seen a lot of hedge funds start moving their quant operations and their AI algorithms development here to Montreal because there's a lot of talent here.
Talent and money, that's a good combination, right?
It is
great
indeed.
combination.
It is indeed, yeah.
Right.
Now, private companies used to receive and still do receive SR&ED credits. Now, the Quebec government has done something interesting that's different than the other provinces when it comes to SR&ED. And would you be able to elaborate a little bit on that?
Yeah, I'm not an expert on SR&ED credits. Claude knows a lot more about them. Claude, our CEO, and obviously our CFO. But basically, the SR&ED program is a well-known program. The federal government, reimburses money invested into R&D. But what we have in Quebec is the provincial government will also do that, kind of doubles the amount of money you get back from the SR&ED. And then when you become a public company, the Quebec portion remains, I believe, refundable. There's just a few tax benefits to doing R&D here, which lowers the overall cost of development. So again, that's why one of the reasons that many people want the engineering to be in Montreal. So for instance, large companies, there's a few like Sonder and some others, which started in Montreal, either moved down to Boston or Silicon Valley, set up the headquarters to raise more money from US VCs. They always keep their engineering here because they essentially get it massively subsidized by the SR&ED credit. So it allows us to develop companies a lot cheaper than if you're trying to develop them in, say, Europe or the US or even elsewhere in Canada.
It's really interesting what happens when the government decides to work with the community and realizes some of their shortcomings and turn it over to people who can do it a little bit better.
Quebec's got a lot of faults. Don't get me wrong, it's got a lot of faults. But when it comes to economic development, they don't always get it right, but it's a cultural thing, right? It's a French-Canadian cultural thing where we're not adversarial, we like to do things by consensus. So you get all the players around the table, not just the government, but you get the large financial institutions like Desjardins, you get the VCs, you get the businesses and the trade unions, and they all kind of get together and say, what do we want to do? Okay, and then they all pull together. So everybody is pulling in the same direction. And when it works, it's fantastic, like for the video game industry. And now we're trying to make that happen again here with AI.
And just for me to go full circle, because you've made some really excellent points, Daniel and Vaughn, from a public market, because our audience are public market people, what I've been saying, and hopefully this will start a trend with you guys, is getting access to those great private companies and getting them into the public markets. And I don't think there have been enough people from investment community, from the stock exchanges, whatever, really getting in there and telling them about that viable option to receive capital is in that marketplace. And Quebec has done a great job of starting the funding. But after that, every company, as they grow, they've got to look at different opportunities. That could be private equity as well, public markets, VCs, if they're fortunate. So, I think that trend is just hopefully gonna expand. And maybe you could talk a little bit more about that from your vantage point, and also the companies, again, that you brought into your fold.
Yeah, I think that's a very good point. Like, up until, quite frankly, if you look at the last 20 years, right, the last 20, 25 years, most of the wealth creation out there has been in the tech sector. The Facebooks, the Googles, the Amazons, even Microsoft has been incredible value created there. Now, most of that value goes into the pockets of the venture capitalists, because the VCs invest in these private companies, they take them to IPO. And in the past, back in the 90s, after 4 years, it'd go public. So there's still lots of upside. But what we've seen in the last decade is companies are staying private longer. So by the time tech companies go public, most of the upsides already happened. Public market investors, especially small caps investors, don't get access to these deals. If you want to invest in a venture capital fund, the minimum check size is $250,000 and your money is locked in 10 years. So what we're trying to do here is say, look, the public markets deserve to get access sooner to these companies so they can get all that massive upside. And these smaller companies that the VCs say, you're good, but not good enough for me, they need capital. So we're acting like as a middleman. We're trying to take that capital, which wants the upside, that wants the growth, that wants to get in on an exciting and growing sector, has no way in. We're providing that path in, and we are selecting the best companies to invest in. Because one of the problems with AI is 90% of the AI companies aren't doing any AI, right? It's either just
How does that work?
like, okay, I'm going to like Barrington. I'm going to date myself a bit here. I think people which are old enough to remember the dot-com bust, remember all these companies which are called, I don't know, moving company, Dan's Moving. And overnight it became dansmoving.com. And all of a sudden we were raising a ton of money because we had .com in our name, right? And so we've seen the same thing. Everybody's trying to say they do AI now because it's kind of like magical pixie dust and it adds value to your company. So what we have here is one of the best AI due diligence teams in the country. Vaughn has incredible experience in that. Claude built one of the first AI companies here in Montreal and exited successfully. I've been involved in the space. And so we are actually looking at these companies, both from a technical, but mostly commercial point of view, obviously, to ensure they're the best. So that's what we provide to the public markets. If you want to invest in AI and early stage tech companies without having to do all of your individual due diligence, well, you can go through Machina AI and invest in a basket of companies because we're buying a bunch of them. And so you get a diversified portfolio of some of the best opportunities in early stage tech.
To give the people an idea, how many companies have you looked at this year in 2022? And or how many did you look at in a 12-month period?
Yeah, good question. So, I mean, as it stands right now, there are about, 265 companies have made it to the stage, where we are engaging with them and interested in sort of like pressing further and meeting them and getting to know, where they're at and understand, the financial picture. To get to those 265 companies, we probably went through at least 10 times that, maybe more, right? In terms of, scanning through over, 3,000 companies in the last, that would have been in the last 6 months, right? So, I think it's safe to say that, we scan upwards of 5,000 companies, within a 12-month period. It's a steep drop-off curve, right? Like in order to get one deal done, it's a 1 in 10 that we engage with will make it to the due diligence stage. We'll make it, and then 1 in 10 again go from due diligence to an offer, right? And so that's a 1 out of 100, 1 out of 1,000 conversion rate, right?
That's incredible. And
yeah, so we've always been very selective, but things are actually really good for us. I saw, maybe a comment on the markets. We've seen a correction. We've seen tech valuations come back down to reality. And that is really good for us because even though we're being very selective, we now have even more companies which have become available to us because of this market correction. Because it means for VCs, a lot of the companies they're betting on are no longer viable and we need to get them off their books. No longer viable for an IPO, but they're still good businesses. And so now we're able to buy businesses today for essentially half the price of what we would have to pay, 6 months ago.
As we look onto the horizon and you sort of have an insight, what types of companies are you seeing more of? Which ones, what industries, what sectors are appearing more and coming across more on your desk?
So we're seeing a lot of companies within the manufacturing space, within, like we already touched on it, the farming and agriculture space is definitely booming right now. We were just speaking with a company who sort of specializes in analyzing satellite images and understanding, from that 10,000 foot view, what's going on, in a farm, in a rural area in terms of the growth and any, anomaly detection and things like that. Supply chain is another big area. There's certainly a lot of activity happening there. And energy, actually. Energy is an interesting one as well. There's a few interesting companies who are, getting into first resources and energy to help improve efficiencies there and operational excellence.
And we've talked a lot about Montreal and Quebec. and a little bit about North America, being specifically Massachusetts and the West Coast. Are you seeing anything from outside of North America coming into Montreal or talking to you, countries that you wouldn't necessarily assume?
Absolutely. Actually, this week I connected with a delegation of companies from Korea. So some South Korean AI companies are quite interesting, quite advanced, and we're starting to look a little bit deeper there. Definitely, there's quite a few companies in Europe that are doing interesting things in the AI space, and yeah, I think those two markets are where we're sort of starting to set our eyes next.
Danielle, Vaughn, on behalf of the Canadian Securities Exchange and on behalf of Scott Pritchard and myself, Barrington Miller, we just want to say thank you for your listing application, and we look forward to having you on our exchange. But more importantly, thank you for contributing to this dialogue of machine learning, of what is going on in Montreal, what is going on this side of the country. And we can't say it enough. This has been a special presentation by the Canadian Securities Exchange. We were talking with X Machina, soon to be listed, and my co-host, Scott Pritchard. This has been a educational update. Gentlemen, seriously, thank you.
Thanks for having us, Barrington. Scott, great questions, great conversation. Looking forward to being listed.